According to CoreLogic, one of the nation's leading real estate data companies, there's a 65% chance that your home is overvalued, and you probably live in one of these markets or you're interested in buying real estate in one of these markets. And today we're going to take a look at that data across the United States and see just how many real estate markets are considered overvalued right now. And this could be a good way to actually spot some opportunity out there for some areas that might be safe to buy in, even in this crazy housing market. And it might also give you some insight into where you might want to stay away from, because there's a good chance that we could see a downturn in the near future in these areas. Now, over the past 12 months, the US housing market across the board is up about 20% year over year, which is basically a record amount of appreciation. But the problem is, this level of appreciation is completely unsustainable, and they consider these housing markets we're about to look at overvalued because the wages in these areas have no correlation with the price of housing, because without the wages increasing enough, then basically there's just no way that the cost of these homes can continue to increase at this rate, and there's a high probability in some of these markets that the prices could be facing a downturn in the near future. So let's take a look at the data and see which housing markets are considered undervalued, overvalued, and normal. According to this article, guys, the most overpriced markets right now are Boise, Idaho by 75%, Austin, Texas by 66%, Ogden, Utah by 63%, Las Vegas, Nevada by 60%, and Atlanta, Georgia by 60%. So these are areas that you probably want to steer clear from if you're looking to buy right now, because if there is a downturn, these are the areas where you're most likely to get burned the most. So as we can see by this first map, all these areas in red that we're looking at here are considered overvalued, and then the areas in purple are considered normal, meaning that these are the prices that they expect to see basically even in today's market. And then there are some very few markets that are considered undervalued, which some of them are kind of surprising if you ask me, because one of the first ones I noticed over here was the San Francisco area saying that it's undervalued. That seems kind of suspicious to me. I don't know why they would consider that undervalued. I guess it's because of that correlation between wages and housing prices, because people in this area make so much money that there's potential for the cost of housing to go up even further. One thing I was surprised about was to see just how many areas in California are considered normal right now, like Bakersfield and San Luis Obispo and Fresno, even the Vallejo, California area. But one thing I did notice, Sacramento, completely overvalued. And I'm not surprised, because I was personally looking to buy an investment property there a few years ago. And when I was looking at homes there, many homes were in the $200,000 price range, a lot of them even less, just like 3 or 4 years ago. Fast forward to today, homes in this area are well over $400,000 in a lot of cases, and that seems very unsustainable. And notice another area in red, we have Flagstaff, Arizona, Las Vegas, Nevada, and then of course Phoenix, Arizona as well. And then going over to the East Coast real quick, my home state of Florida, notice how we have no markets in Florida that are considered undervalued or normal right now. Every single market here in Florida right now is considered completely overvalued, which is pretty interesting, because many of you in the comments think that the housing prices are never going to come down in Florida because it's too desirable here. But it's looking like that might not actually be the case. And then we can see a lot of areas basically in the western half of the country, in Texas and getting into the deep south, that are really considered to be overvalued right now. And then of course a few pockets in the northeast. But then when we look at these purple areas, these are the areas that I would think that it could be safe to invest in real estate right now, because these areas are probably not seeing these massive price increases. Even though the prices went up 20% across the board, these areas likely haven't seen that 20% price appreciation. So if there is a potential housing market crash in the future, there's a much lower chance that these areas are going to be affected by it. And then, as I said before, there are very few areas like Peoria, Illinois, and then some areas up here in Michigan near Detroit and Saginaw, and then even some areas over here by the Bay Area in California, and a couple of random areas like in Georgia, Southern Illinois, and over here in Missouri are considered undervalued. Just because these areas are considered undervalued doesn't necessarily mean that they're good areas to buy in, and of course you need to do your due diligence to see if this could be a good deal for you. Because the law of supply and demand cannot be ignored, it can turn markets into supernovas, like the one the Wall Street Journal called among the hottest markets on earth. An alternative that's beaten gold, real estate, and the S&P 500 by 3x over the past 25 years. The art market. It's odd to think about, but 61% of high net worth individuals allocate over 10% of their portfolios to art. It's got low correlation to public equities and can even resist periods of high inflation with average price appreciation of 23%. And if you don't have millions to shell out on a Warhol, no worries, enter Masterworks. They're the investment platform valued at over $1 billion that lets you capture the incredible benefits of art investing at a price that works for you. It's so simple and elegant, which is probably why they already have over 400,000 members, including some of you guys after my last video. If you want to get priority access and skip the waitlist, click the link in the description below. Now let's take a look at how much some of these areas are overvalued by. So they have another map here on this Fortune article that basically shows the percentage value of how much they think the homes are overvalued by. And if we take a look at those same markets, like let's go to Florida for example, where I live here in Miami-Dade County, they're claiming that this area is about 30% overvalued. So if you could take this information to heart, like look at Port St. Lucie for example, 40% overvalued. If this information is accurate and there is a housing market crash, this is probably a pretty good indicator of the percentage that properties may go down in value across the board. So I'm going to have a link to this information down in the description for you guys so you can just play with this map yourself and just take a look at your area or areas you're interested in to see what the market's like there. But I think it's very important if you're a buyer in today's market or you've been thinking about buying to check out this information, because it could make all the difference in the world of whether or not you could get burned if a housing crash does occur. And one thing I want to take a look at here is notice the color code. The deeper blue it gets, then the more overvalued the housing market is. And the places that come up as the most deep blue here, Boise, Idaho. 73% overvalued, guys. This is by far the most overvalued housing market in the United States according to this CoreLogic data. And it's a place that if you're looking in right now, you need to be extremely careful because there's a very high probability of prices coming down significantly in areas like this. Lake Havasu, Arizona, 56%. Okay, Phoenix, Arizona, 46%, guys. And then let's go look at some of those undervalued areas like the Bay Area over here. They're saying that these areas are overvalued by only 6%, which is kind of conflicting a little bit because in the previous map, it showed that these areas are considered normal or even undervalued. So in this map, it's showing that it's 6% overvalued. And I would say that's probably pretty accurate as someone who looks at real estate in this area regularly. It is probably a little more expensive than it should be right now, but really not by much. And let's go over to Illinois real quick, where I'm from, and look at that. The real estate here is actually in the negative percentage here. It's actually 1% undervalued in this area, which I find interesting because Illinois is one of the top states that people have been leaving over the past couple of years. So I think that data like this doesn't take into consideration those migration patterns and maybe like the desirability to be in a certain area. So that's another thing you want to consider when you're looking at this map. And then let's go down to Texas because a lot of people have been moving to Texas as well during the pandemic. And if you look at the Dallas area, 33% overvalued. You go down to the Houston area, 28% overvalued. The Austin, Texas area, 41% overvalued. And then let's go back to Florida. So if we look in Orlando, they're saying that area is 24% overvalued right now. But one of the safest markets, as we can see, is actually the Villages, Florida, which is pretty interesting because that area has just been exploding, and it's one of the top migration destinations in all of the United States right now. And the fact that it's 2% undervalued right now is pretty mind-blowing to me. But it could be because they have so many construction projects happening in that area, because if there's anywhere they're building like crazy in Florida, it's the Villages right now. Gainesville, 5% overvalued. Tallahassee, only 11%. And then no surprise here in the Destin area, that's also pretty high on the list at 40%. St. Augustine area, which is one of my favorites, is 37% near Daytona, 30% overvalued in Jacksonville. Now let's take a look at New York. How about Manhattan? It looks like New York is only 5% overvalued right now. Manhattan's always been a very expensive housing market, and that's probably a place that, you know, if there's a housing market crash, the prices probably are not going to collapse like in a lot of these areas you see in the deep purple and even blue in some cases. Take a look at Nashville, 48% overvalued right now. We have Grand Junction, Colorado, 37% overvalued. And you can see, guys, a lot of these areas are in Florida too. Tampa, the hottest housing market in the United States right now, 37% overvalued. And guys, this article has a lot of real estate experts worried, because basically what this information points to is the fact that housing has not been this overpriced since the 2007 and 2008 real estate bubble. And the concern is that we're right back where we were before. I know everybody keeps saying this is not like 2008, and you're correct, it's not. There's a lot of different circumstances that led us to where we are right now. But the fact of the matter is the real estate data and the valuations and wages that these maps show you are basically pointing to the same thing happening that happened back in 2008, but the catalysts that caused it this time around are just different. And interestingly enough, it even points out in this article from another set of data from Moody's, they claim that 96% of housing markets across the United States are overvalued right now. So this is just some helpful information I want to share with you guys to make sure that you don't get burned in your next home purchase. And if you want to know even more information about how to make sure you don't get burned in your next home purchase, then check out this video right over here, and I'll catch you guys over there.